I'm going to unmute someone. I'm going to unmute Daniel right now because I want to see if you're able to hear me. Daniel,
Yes,
you
we
can
can
hear
hear
me,
you,
right?
Z.
Okay.
Yes, I can hear you. And your screen is unpaused. We can see you moving around the chart
And
now.
can you confirm if my screen sharing is disabled right now? Can
Yes,
you see my screen or you can't?
I can see your screen, but I can't see your cursor moving. I can only see the trading view screen.
Okay, you can see the trading view screen.
Yes.
Okay, okay. Thank you for confirming. I'm going to mute you now.
Okay.
Now I think you can see my cursor moving. Okay, so let's sorry, I'm just getting a hang of Zoom right now. I'm slow with these things. So the first thing that I do when I wake up, I'm going to say wake up. I don't wake up, but when I look at the charts for the first time in the morning session, the first thing that I do is I go to the Dixie, that is the dollar index. And now we have the dollar index daily chart here. I usually go to the weekly and just take a look. Now, what I see here is this weekly sell side imbalance, buy side, weekly SIBI here. Sorry, I'm getting a little nervous right now. So we have a weekly SIBI here, and we are above it, and we have a daily level here that might be a potential draw on liquidity. So what I am thinking right now is we had a very minor sweep below sell side liquidity. I wouldn't even call it a sweep. It's just, I think it just went like 1 or 2 points or whatever below it. So what I'm thinking right now is it failed to sweep out sell side prominently. It did take out the rejection block here. So I think this is a sign of higher prices in my opinion, but I'm still not very confident about it because we are in uncertain times. We have all the news. I'm sure you are aware about. You are up to date with the things going on in the world right now. So it's a very risky environment right now. But on the basis of technical analysis, what I'm watching is we have this city here and we're above it, and we have a daily level that can be a potential draw on liquidity here. But it's not a confident draw on liquidity. We are watching if it can reach there. Also, this was uh, given as a drawn liquidity on Discord for the previous week, and it reached there. And we have, I'm not going to say failed to move low because it can still move, because it can still go lower from here because it's just Wednesday of this current week right now. But for now, we have this daily fair value gap that was the target last week. But right now, we are inside of it. And I'm watching if we can move here. Why we can move here? Because it lines up with this fair value gap and the mean threshold of this bearish order block. It lines it with it, and also we have this mitigation block here. So I'm watching if we can go here. That's the thing on dollar. Now I may move to a 1 hour chart. On the 1 hour, yesterday I said I wanted to see it go below the sell side here. It failed to do so. Yesterday was a very important day in terms of analysis because the dollar index was a very strong confirmatory tool for us to confirm that we are going to have a choppy day in equities, and it did have a choppy day. I mean, Look at it. Right. Till 12 a.m. we chop like very bad. Yeah. Yeah. We started to move low around 12 a.m. The whole of AM session right here was a big chop. And if you want to learn how to read price action, this is the most important thing in my opinion. Because if you can't, I mean, if you look at it on the lower time frames, see here. If you look at it on the say 1 minute chart, look at this. How many times would you have thought that this is a market structure shift, fair value gap, short here? Market structure shift, fair value gap, short here, stopped out. Long here, stopped out. So many times. This is the job that you have to, you know, learn to read price action so that you can anticipate that the conditions will be low probability and stay away from the markets when you determine that the conditions will be low probability. And how did I anticipate that it will be a chop in equities based on the dollar index? When we were here, we already had taken out buy side liquidity, and I said that we were going to, there was a quadruple low here. I mean, in inverted commas, quadruple lows. So I was hinting on private on the Discord channel, text channel, that we are going to dip below the quadruple lows into this fair value gap, and then we will see how price reacts to it. These quadruple lows, we dipped below it and it failed to support price. Since it failed to support price, just a second. I think everyone is okay. Everyone's here now. So what I was saying is, you were watching these quadruple lows around here. It looks like two lows here, but on the lower time frame charts, it was like four lows. And we were watching this fair value gap in particular, and it failed to support price. Now, since it failed to support price, that means it refused to move higher. And our bias on the equities was that it should move lower. Now, if dollar is failing to support price, if dollar is refusing to go higher, if dollar is saying that no, I'm going to go lower, that makes it very, very difficult for equities to go lower, because the dollar lower, equities should move higher, but equities were not willing to move higher. Why? Because they were inside of the new week opening gap. They were finding resistance with the new week opening gap. And that's why I even annotated in the charts that I'm not willing to go long if ES is inside of this new week opening gap. For me to feel confident about going long was two things. Dollar should go short, dollar should crash, and ES should find support with the new week opening gap. But ES was just chopping around inside of the new week opening gap. It was failing to make higher highs with the lower lows in dollar. So that makes it a very difficult and choppy environment in the equities. Also, when it was here, it was I said it should resist price and move below this sell side liquidity. It didn't do that, so I got it wrong there. But see, it's just chopping around right now. It's just consolidating. So we stay nimble. Why do we stay nimble? Because we are also We have also achieved our daily targets right now. We are inside of this daily fair value gap. So until and unless it moves above it and finds support, we should be nimble because we have already achieved the daily and weekly and higher time frame levels. And also the political factors that I'm not going to speak out loud. So we've we looked at the daily chart in dollar. We look at the hourly chart now. I'm going to take this all off. This is the daily fair value gap. This is the weekly CP's high and low that we are going to invert if we're looking for bullishness in dollar. I even said that we are around the consequent encroachment of the weekly CB. So that means we can find support there, and I roughly think it did. So the hourly chart, what can we see here? I don't see anything prominent. So we'll go down to the 15 minute. We have this 15 minute. Just a second, I'm doing something right here. I hope all of you are doing well right now. Mhm. So what I'm thinking right now is we are inside of this daily fair value gap. So we have the daily fair value gap outlined here. And what I can see here is we have this whole rally up, then it moves down. What I'm thinking right now is this is one consequent order block right here. I don't want it to close if we are going to go down. I don't want it to close above this fair value. Let me say it properly. This fair value gap right here. If you're going to go down below these lows, it should not close above this. That means it should not, it can wick into it, but it should not close here. If it closes here, that's a bit troublesome in my opinion. Because this is a one consequent order block right here, starting from here till here. So we don't want these the candle right now forming and the candle that is going to form later on. We don't want any of them to close above the mean threshold of this bearish order block. The mean threshold will come around here. So we don't want it to close inside of this fair gap. It can wick into it, but closing would be troublesome. Anyways, we don't have any strong opinion right now. So we are on the 15-minute chart right now. We have this little gap right here, that is the CB. So we're watching. And also this gap is around the mean threshold of this bearish order block. What is the mean? What order block am I talking about? Let me clarify it. This whole here. This is what I'm talking about. And where would the mean threshold be? See how beautifully it outlines with this fair value gap slope. Beautiful, beautiful, beautiful. This whole consecutive up close candles is a bearish order block. How? Look at it on the 1 hour chart, maybe 2 hour. How about that? Oh, what is a bearish order block? Taking out liquidity around a support level, around a resistance level, sorry. Taking out liquidity above these highs inside of a resistance level. Now, don't get confused. I, I'm, I think it can go here, but it's not a strong opinion of mine. It's just a gun to my head type of concept. And to you know get clear opinion, we are watching this fair value gap right here because it is around the mean threshold of this bearish order block. This is a key level fair value gap because if we resist it and go lower, then I think these lows are next. But if we find support, then we have multiple supports here. That would be this inversion. We will invert it and look if it finds support here and this level right here. Because this is around the daily level, this can also be supportive for price if we go higher and find support. Then this is the next target for bullishness. Now let's go to the E-mini S&P. I'm sorry, this is my first time taking a live class, so I'm a little nervous right now. So let's go to the daily chart right here. And as I outlined in a private session, I said that I would not like to see this fair value gap retracted back to, because if this fair value gap was retracted back to, I would not look at it as a bearish order. I would not look at it for support because this is too much inside of this balanced price range, this whole consolidation. I would have looked for support for ES inside of this BC here. But since it moved lower, I said it in my private session that I would look, if it came back here, I would look for it to resist price and move lower. I'm sure you remember. So now looking and see. Let's look at it. And I have a question in the meeting chat. Can we trade Dixie? On TradingView, we can, but I'm sure many brokers don't provide Dixie. So I prefer not to trade it. I mean, there's no point in trading it if there's no real trading around it. So, so when the daily chart for even S&P right now. So why discuss it? Someone is asking me in the meeting chat. So why discuss Dixie? Because it is a, I mean, if you're asking nicely and you really want to learn about it, I said it, I explained why we should discuss Dixie because it is the father of all everything. Dollar is the king of all currencies. And if you want to, I mean, analyze the other pairs that you are willing to trade, you have to look at the dollar. You have to consider the father of all currencies, right? If you, I mean, if you had not looked at Dixie yesterday, you would have gotten chopped up very badly in equities, and you wouldn't have, you know, you wouldn't have guessed why it happened to you. But since we were analyzing Dixie yesterday, it was we were not hurt by it. We were not hurt by the chop in equities because we anticipated that chop. We knew it was going to chop because the dollar index said so. So yeah, we are on the daily chart for E-mini S&P. Now we'll go to the daily chart for Nasdaq. I mean, these are the three predominant assets that I analyzed. We have this volume imbalance and weekly liquidity right above here, but and we also someone just a second. Um, I'm sorry, this is my first time, so it's a little clumsy right now. But if you look at the weekly chart right here, we have this weekly buy side liquidity, and look how it made an equal high right here. I'm sorry, I just have to go for 1 minute. Mm, yeah, 1 more minute. So what I was talking about is we have I was targeting I was looking if I was targeting this weekly buy side liquidity, and it made an equal higher, and in my opinion it will not move lower on the higher time frames because it's very close to the liquidity objective, and it should not just leave it there because look how far we have come from, and we have come here for this high. And why? Because ES is failing to move towards this high, and Nasdaq is willing to move towards this high. So if Nasdaq worked so hard to go for this high, I think it should take it before moving anywhere. It should take out this high because Nasdaq worked hard for it. I know it sounds a little human-like, but that's what I think. I'm just saying out loud what I'm thinking when I analyze and look at the charts, the heavy higher time frame charts. You have this daily fair value gap here. Just going to outline. We also have the sell side liquidity pool here. And I think there was an SMT divergence here. Some I took a trade here in my. I took a trade here. I didn't hold it for this one, but it was a good one. I think it was just above these highs that I profited from. Okay, and I no, I don't look at it like oh, I missed this move. I was not aiming for this move, so I'm not regretful if I missed it. I took out my profits here, and I'm happy. Usually, I look at ES and Nasdaq side by side because of S&P and all. Now, if you ask me for ES right here, I think these lows are the next target because this is where sell sided is. And if you ask me for, I mean, if we move here, then I'm going to look for this candle right here that would be considered as a bullish order block to resist price. Also, I would look for this busy inversion level here to resist price. In other words, I would not look for price to move into this fair value gap and then move lower. I'm not sure if you understood what I talked about, but basically, I would not look for price to move above this inversion level here. Nasdaq, in my opinion, this is the target. The high is already delivered, the consequent encroachment, and the low. I'm not comfortable with Nasdaq here because we are in a contract month that has no previous data outlined here. I'm talking about. I mean, this is a liquidity void, but it is in this contract month. So although ICT uses it, although ICT said that it's a liquidity void right here, although ICT outlined this as the volume imbalance here, but he also said that trade with what you're comfortable with. So I'm not really comfortable with using this. Why I'm not comfortable? Because we have this continuous chart right here that says otherwise. So I would, when I'm not confident with one asset, I would use the other asset to guide me, like we did with the dollar yesterday. When I'm not comfortable with the Nasdaq, I would use the evening S&P and the dollar index to guide me in directional bias. I may still trade the Nasdaq when the conditions are favoring Nasdaq, but and also we have taken out this high in the continuous futures contract, so I think it can go lower now. I was talking about it in the June contract, but we have taken out this high in the continuous futures contract. So I think it can still go, it can go lower now. It's free to go, it's free to do so. But we'll still see the Nasdaq June's contract. Why, you may ask, why are we looking at the June contract and why we're not looking at the continuous contract? Because we can only trade the June contract because it is the contract with the heaviest liquidity right now. You can't trade the continuous futures contract. You can only observe it in trading view. You can trade it in trading view, paper trading, but you can't trade it on futures. Mm, So we'll see in the lower time frames. Let's go to the daily again. Sorry, I'm a little bit slow today. It's my first time. Nasdaq. I think we'll just take this out. I mean, I think we'll take that annotation out because we can see in the continuous contract we've taken out the buy side liquidity. So I think ES and Nasdaq, I'll change my statement that I made earlier because of the June contract. I think it can go lower now because it's free to do so because Nasdaq has taken out liquidity. And look how many times, even though ES didn't take out this high, look how many times it take out buy side. One, two, three, four, five. How? I mean, count it. And we have sell side taken out once or twice or thrice or whatever. But you can clearly see that sell side is next. We have this rejection block here. I mean, all I was already anticipating ES to not take out the high because of the it was failing to rip higher along with Nasdaq. What does that mean? That means Nasdaq wants to take out that high. That means Nasdaq need to take out that high because Nasdaq has to provide smart money some liquidity. I mean, a lot of liquidity to go short. Smart money need that. And now, since we have this SMT divergence here that we already anticipated before the SMT formed, ES is the better candidate for going short. Now we'll go to the lower time frames. Just annotating the BC low. For the lower time frames. So we're close to the sell side liquidity right now. I think we should take it.